Okay, welcome everybody. I'm here with Josh Buttrey from Buttrey Financial at Northwestern Mutual Financial. Did I get that right, or did I say it a little bit wrong?
Close enough.
So we wanted to. So Josh is good friend, but also a colleague and somebody that I personally that handles my family's assets and long-term retirement. And so obviously, like everybody, we're concerned about what's going on in the stock market and how does that personally affect us. Not only does our work, but our personal finances. And so I wanted to chat with you today, Josh, and share kind of what we have been talking about offline about, what's going on in the market and what are you telling your clients? I mean, any different age groups.
Yeah. Well, thanks for having me, man. This is a really cool idea. So I've been in the financial planning, wealth management business for just over 16 years. So, we were around helping clients back in 2008, 2009. Anybody that's been investing for, a good period of time certainly remembers that. So what we recognize is that over long periods of time, the stock market has continued to be a really great wealth building tool.
Okay.
In the short run, that isn't necessarily always the case.
Yeah.
So for us and our clients, it's all about sticking to the plan.
Right.
Right. So we focus first and foremost with our clients on building out a financial plan that drives how we're investing. So the investment portfolio is really just a tool to help us build whatever we're trying to build. And the plan or the blueprint, gives us the steps that we need to be taking.
Okay.
So for a lot of our clients, you look at younger folks, people that are in the accumulation stage for retirement or whatever other goals that they might have. I would argue this is a phenomenal opportunity for them because everything's on sale, right? We talk about how the value or the price of an asset doesn't really matter unless you're buying it or you're selling it.
So true.
Right? When the price of something is way down from its previous high, if you're a buyer, that's a smoking deal, right? We're buying more shares for the same $100 a month or whatever you might be investing. For sellers, obviously, it matters when the value or the price of something changes. When it goes down, if they're selling it, that's not good. So how do you avoid that if you're in the retirement phase of life, right, where you're distributing money instead of accumulating money? Well, our strategy is to make sure that clients have at least 10 years of whatever their income needs are in something that doesn't go down, or if it does, it's very minor. So cash and cash equivalents, cash values inside of life insurance policies or bonds. These are generally assets that either don't go down or they're not correlated with the stock market. So when stocks are down, something like a bond is usually still up.
Okay.
Right. So if somebody has 10 years worth of their income needs and something like that, then other than it psychologically hurting when you see your statements, we tell clients it kind of doesn't matter what's going on because we're just not going to sell that thing that went down in value.
Right. So if I can just clarify, so if I'm 20, 30, 40 years old, there's a ton of opportunity this year and in this moment to get in and to build more wealth. And I think that we see a lot of the wealthy, the people that have a lot of liquidity, like the Warren Buffetts that are patient and diving in and getting, buying stuff on sale to say. But if I'm in that retirement phase, asset diversification, and then also balancing that, and then having kind of what I was gathering is having more than enough so that if it shrinks, you're still not, your goals are still met.
Sure. Yeah.
Yeah.
There are a lot of little tactics and strategies that you can use within a financial plan to either take advantage of situations like this, or to not be negatively impacted at the very, the very best. So you mentioned Warren Buffett. One of my favorite quotes of his is when he defines what the stock market is. He refers to it as, quote, a device for transferring money from the impatient to the patient. Half joking, perhaps, but a lot of truth in there. So the key to your point a minute ago is that we've got to be patient. And so we're finding that the wealthiest and those that you would refer to as savvy investors are just not panicking right now. They're being patient. They're sticking to the plan. In our practice, there are some little tactics that we do to mitigate some of this. Rebalancing a portfolio is a great way to sort of take advantage of a significant dip like this. So if you don't know what rebalancing is, it's a pretty simple concept, but most people don't do it. Our natural reaction is when something is doing poorly, we want to get out. And when something's doing really well, we want to get in.
Right.
In actuality, the math tells us you should do the opposite of that, right? So rebalancing is a way to do that. Let's just say that somebody's investing and their portfolio has 80% of the money in stocks and maybe 20% in bonds or cash, things that are a little bit safer. Well, when the value of that 80% goes down significantly, as it has recently, it might now represent, let's just say, 75% of the portfolio. So now they have less money in stocks and more in bonds. So they're not going to have as much opportunity for growth. So what we do is we rebalance. So we take 5% of the bonds or the cash, the thing that didn't go down and probably went up, we sell it and we buy 5% more stocks, the thing that is down. So we're selling something high and we're buying something low.
Yeah.
So when you say it that way, it clearly makes sense, but most people don't take advantage of times like this and do it. So that's one thing. Another sort of silver lining, turning lemons into lemonade, is harvesting tax losses. So the IRS says that when we have gains in our portfolio and we realize those gains, in other words, we sell something that's up in value, whether that's real estate or a stock, they get to partner with us in that growth. And so they get a little tax when that happens. But they balance it by saying they'll partner in any losses that we realize as well. So if you sell something for a loss, that can offset gains that you realize, whether it's that same year or some future year.
Okay.
So what we do is when somebody owns, let's just call it stock ABC, and ABC went down in value, if you sell that stock and replace it with, we'll call it ABD, something that is going to zig and zag pretty similarly.
Right.
Now you've banked that loss to offset gains that you might realize in the future. Really smart strategy that savvy investors take advantage of that doesn't affect your performance. Your return should be pretty much the same. Right. But your outcome is different because you pay less tax on that future gain that you're going to realize later.
Yeah, no, that's I've heard of it, but the way you explained it is so simplistic, but it makes a ton of sense. And I'm sure that there's a lot of opportunity right now for that because we've kind of been on such a good run that there hasn't probably been the opportunity to where stocks or things have been losing money. They've just been gaining. So this is a good tax strategy.
Absolutely. Yeah.
So that's so obviously I do real estate and you do the financial planning. So if somebody needed to get a hold of you or had further questions about this, how would they reach out to you?
Yeah, and probably the easiest way for anybody is just to go to our website. It's buttreyfinancial.com. So my last name is Buttrey, Buttrey, Financial.com. All of our contact info is there. I got my whole team working remotely, so all of our office phone lines are forwarding to our cell phones. We're on email all the time, so that'd probably be the easiest.
That's awesome. Yeah, and I was actually talking with one of your colleagues, Zach, just the other day, and so and so you guys are still working hard, and of course, if anybody has any questions about real estate, what's going to happen in the next 3 to 6 months, what's happening today, I'd love to speak with you. Concerns, questions, opportunities. I can be reached at 714-497-0160, or you can reply to this message and get back to me. So thanks so much for the time, Josh, and look forward to chatting with you in the near future.
Likewise. Thanks, man.